Hey, what's going on, everybody? Happy Sunday. It's February 23rd, 2020, and we are here to do a equities wrap up and a brief analysis of what happened in the previous week and what's coming up for the week ahead. All right. So, for those of you who are not familiar with us, we are from the Cryptosomniac community. My name is Amal, and Faisal is our equities analyst. Today,
Hello.
we're going to essentially give you guys a breakdown of what we're looking at for the week ahead. We're trying to do these videos every Sunday, so you can see a video from last Sunday and the one before. And so you guys can watch this and give us your thoughts, leave us a comment, give us a thumbs up, or if you really don't like us, give us a thumbs down. Regardless, I hope you guys watch these videos and gain some knowledge because Faisal, our equities analyst, puts in a lot of work and content into the equities channels over here in the Cryptosomniac Discord. Okay, so without further ado, let's get started. What's going on, Faisal?
Not much, man. It's been absolutely like a really confusing week in the market, and I think this upcoming week will define whether or not we will go into a correction for the next month or so. So yeah, let's go ahead and get down to it. There's a lot to get into.
Awesome. Perfect. Okay, so let's open up the S&P 500. Looks like the last 2 days since Thursday, we had maybe about a 3% pullback or so from the top. Let's see where we are. About, I guess, 2%.
Mhm.
What do you see happening in this movement? Do you think we're maybe a bit overbought? We need maybe another 3 or 4% pullback?
So this is what's key. I think Monday specifically in the pre-market, you will know whether or not if this market opens down, and there's a high possibility that this market, if it wants to continue to go down, you'll see in the pre-market before Monday's open, it's already down like 150 points. At that point, this market will definitely sell off probably another 3-4%. It'll be probably a terrible week. Where everything closed Friday, it was kind of on the cusps of not knowing what the market's going to do because you had a lot of conflicting factors associated with last week. So just to start off, the big headline, the coronavirus, for the past couple of weeks, we've been saying, hey, market does not care about the coronavirus. Stocks that had Chinese influence still continued to rise and go up. And then you started to get, during the midweek, I think it was Wednesday or so, reports came out that once again, the market suddenly cares about the China stuff and market started to sell off. Apple, I think, cut their iPhone estimates for the entire year or so, just for the coronavirus related stuff. But other than that, there wasn't really that much news that wasn't already baked in. I think Lululemon said they were going to close stores for a little bit longer. But for the most part, it's kind of like the same stuff that everyone expected when they first heard that this virus started to grow rapidly, which is it could affect supply chains, but not for more than one quarter. So I think, what we saw last week was a majority was you saw tech sell off 1%. The rest of the market actually was flat, surprisingly. It was mainly Apple, Microsoft, the big tech stocks that really just sold off hard. And so it created a lot of confusion. It's not just tech that has exposure to China. You have stocks like Walmart, who has enormous supply chains to China. And Walmart was up Friday. Walmart was up, Walmart looks like it may continue to go back up. And that
Right.
stock is no longer, like, as far as a valuation metric, you could say it's a little bit more expensive than not. And the fact that, I saw outperformance in multiple stocks like that, I want to just wait. It was really a lot of technical factors broke in software, semiconductor, and big tech, which are kind of the big three momentum pushers that have been leading this market higher for the last year. You saw a lot of their technical points break, but a lot of the leadership in other sectors were telling you, hey, everything's going to be fine. So that's why I'm saying I think Monday, right off the bat, you'll know whether this market wants to go down or not.
Interesting. And so when you talk about semiconductors, do you kind of look at a ETF like the SOX ETF or?
I look at SOX and SMH. Both of them are pretty good.
Okay. Now I've heard this saying, and I don't know how true this is, but um, semiconductors and chips typically lead the tech sector, and tech more often than not, at least the last few years, has led the S&P 500. How true is that?
Oh, it's extremely true. Especially now that you have the new age of technology. You know, before when semiconductors used to lead the market, it would be okay because of the rise in computers and how diverse mobile phones have gotten. Um, Semiconductors were being implemented in the core aspects of how we do business, whether it was through phones or computers. Now you have semiconductors in your house. Like you got smart refrigerators, smart AC units. Like the use of semiconductors is so it's the volume is rising so much in so many different areas. I think it's as long as you see, the demand continuously go up, that's very positive for not only the market but innovation in general. I mean, you can expect that more innovative products and hopefully better products will come out as a result of um, you know, semiconductor technology increasing.
Interesting. So the SOX ETF looks like this yellow band right here. That's the 50 moving average. Looks like it wants to come down and test that 50. Um, when you look at moving averages, where exactly do you use them, and which ones do you use specifically?
Moving averages, moving averages are a little bit different for me. I tend to believe that as far as for on a stock basis, stocks move to different moving averages. So for let's just say Apple, you may see a lot more buyers move towards the 50-day moving average versus like Starbucks, which may have a ton of buyers at the 200-day support and not really that much at the 50-day. That's kind of like my general thesis. As far as looking at indexes and moving averages, I think you can, the 50-day and the 200-day are both very critical. I think one that gets overlooked a lot is the 400-day. I find tremendous value in the 400-day moving average. And I really don't hear that many people talk about it, but it really does. I really just love to use the 400-day as far as my last stop moving average.
Interesting. So 400-day, I mean, I guess the logic behind that is it encapsulates basically a year, of trading inside the moving average.
Mm-hmm.
Okay.
And you
So,
can use the 400-day within multiple time frames, like the hour, the 400-day in 30 minutes is valuable. The 400-day in 2 hours or in 4 hours is valuable. I find multiple things. The 400-day is really a nice moving average that I like to use a lot.
interesting. Okay. Good to know. Good to know. And what are your thoughts on Tesla, man? It looks like it's back.
Man, Tesla, like I said, I think I've put out a little on Discord. I put out a little statement when it started to first sell off. I said it should not break 650. I mean, 650 is where I saw a ton of the buyers holding it up, and I think it went only down to 670. I said,
Yeah.
do not sell it like if it can hold that 650, even though it's gone up so much. No way, because I
Right.
think the underlying trend of investing more in clean energy is real. It's now. And I think Tesla has become the forefront of that clean energy movement. So you don't want to get out of it. I mean, I think that 650 will end up being the floor, a pretty good floor for a year or so. And then if there's some serious problems with the stock, it should break that. But, if it gets down to that 650, 670 level, that's kind of a buy for me.
Nice. Nice. Yeah. It's definitely looking good right now. I mean, it climbed back up, sold off from almost 970 down to 687 in less than like 2 days. And it rebounded back towards 900s in less than a week or so.
Oh yeah, it's been a mover.
Yeah, definitely. So stocks like Tesla and Amazon and Apple, I mean, these are, sort of the tech leaders, and they seem to be doing pretty well. So does that kind of tell you that, hey, even if the market pulls back a little bit, as long as, say, the bigger, majors like Google and Amazon, Apple, Tesla, as long as those are doing fine, we should be okay. Do you ever read the market like that?
Oh yeah, of course. I have my own leadership watch list. I have my own leadership ranking, And a lot of the times, yeah, I do factor in how the leaders do, um, as far as where the market will go, in the short term. Um, but with Tesla, I think I would kind of associate it differently than an Amazon or a Google, because it really has become extremely expensive. I think Google is actually a good value as far as fundamentals. Amazon is fairly valued. Tesla is just extremely expensive. But that doesn't, like, its outperformance should tell you something. When people start buying expensive stocks like this, it can mean one of two things. One, the market is just totally in a bubble, or two, the market is feeling so good that they're willing to buy these high risk investments because the near term future looks extremely good. So right now, what I'm reading from Tesla, especially the outperformance of that, is that, okay, the market is still willing to buy growth, and that's a very important thing. When people get scared, they like to buy value, they like to sell growth instantly. And so in this pullback, or in this last week, the fact that you had such a expensive stock like Tesla, that has gone up so much, not give up all its gains, that's a very good sign in the short term.
Yeah, that's a great point. That's true. Tesla, Amazon. I haven't really seen these stocks, shake a whole lot. I mean, Amazon's
No.
or Apple is really just consolidating in this like $10-15 range.
Hmm.
Um, Amazon had a kind of a pullback, maybe like 2% or so, or 3%. Let's see. So yeah, I guess it went down about 4.5%.
Hmm.
Um, I guess one thing I've noticed in the S&P 500 is that on Mondays, and this is something that I read. I forgot what the person's name is. He puts out statistics about Mondays when you see uh, gap downs on a Monday candle. More often than not, especially if you're not like significantly ready for a correction, the remainder of the week, Tuesday through Friday, you'll just see like a big push to the upside.
He's
So if we
absolutely
look
right.
at
Yeah. I don't know who said that, but that's something I've noticed too. Yeah, he's absolutely right.
like this kind of gap down candle, I mean, say this if this was a Monday, right?
Hmm.
Then the following week is just gonna be, really bullish. So
Yeah,
I'm hoping we
it's
get
going to
something
try and
like that.
change within that range. I'm sorry. Go ahead.
Yeah, so I'm hoping that we get some candle like this because then we can have maybe another continuation of the uptrend. Or if we're really seeing exhaustion, what we could do is have like a gap down, push back up, maybe in lesser volume, and then sell off some more. Is that something that you kind of pay attention to?
Oh yeah, that's something I really should read a little bit of those statistics more, but that's definitely something I've noticed. That's a very, I've noticed that a lot when the market tends to be in an uptrend. But like I said, if the market does gap down Monday, I don't expect that uptrend to happen because of where the market is. I think where the market closed Friday, it needs to hold that point. And if you do see a gap down, I can see continuous momentum to the downside for sure. But as far as what he's saying, yeah, I think that's a classic characteristic of an uptrend market. Gapped out on Monday, and you start to see it kind of trade within the range that it made in the previous week. And if it can break out above that range within that week, or definitely the next week, the market will show you it's still in an uptrend.
Got it. Got it. So come Monday, are you kind of waiting for the market to like how do you position yourself, knowing that, hey, we might be due for potentially a bigger sell-off? Like starting off Monday morning, how do you position yourself, in terms of stocks? Like, are you waiting for certain signs for the market to show you that, hey, it's ready to push back up, or are you just ready to sort of buy the blood? And do you just, cost average down into some of the leaders?
I'm more on the lines of I'm willing to take a shot at the, like, right where the point of, like, where I'm supposed to sell. I'm willing to buy the stock a little bit above that point, and if it breaks a little bit below, that's when I get out. So I've kind of positioned myself. I bought last week, and so I bought into stocks like Medtronic. I bought Apple because I said if the market's going to go up from this point, Apple's going to lead it, obviously. And I bought a couple of those names, and it's kind of just about what do you think will lead the market at this point? I also added a little bit to ICLN, which is a clean energy ETF, because as we saw with Tesla, Tesla has become kind of the face of this alternative energy movement. And look at this ETF, it's just shot up tremendously. And so I think clean energy will continue to be one of the leaders in the market, because on my fundamentals, even though this ETF's gone up almost 50% in 3 months, when you look at a lot of the stocks in the clean energy sector, they're fairly valued. They have a lot of room for margin expansion as technology gets better with solar panels. And the trend that I'm starting to see, I read a report, earnings report in one of the biggest American solar energy names, Solaredge, SEDG. I read the report, and there are two players if you want to play clean energy that's worth playing. One is Solaredge, which has a really big hold on residential and commercial alternative energy, but they're moving more so. It seems like their demand is shifting more so to commercial energy, and they're starting to see more and more commercial enterprises switch over to solar and alternative energy projects. So that's something that I think that the growth is, we are right there. I mean, like we're close to the beginning. I don't think many enterprises are thinking of alternative energy as a way to improve their business, but it looks like they're seeing the demand year over year. They're improving revenues by like 50%. They're still a relatively small cap company. And I think, with the trend of clean energy in companies, it all started when Microsoft said, we want to be carbon neutral by 2030. I think this is one of the best players you can play. And so I'm looking to add this stock on any pullback.
Interesting. So, okay. So we've talked about clean energy. We've talked a little bit about tech. Now, lastly, I mean, one thing I wanted to mention is, one thing we understand about this market so far is that the monetary policy, the economic policy that the United States has is very favoring of, the moving the market up, right? Because as long as your economic policy is helping cushion the market, we should expect pullbacks to get bought and the market to push higher. And so are you sort of seeing, similar thoughts on your end, or do you think that we're kind of in a overextension of the market and we're looking really shaky, or rather, just overstretched to the upside?
That's a great question. The trader in me feels like, yeah, we are definitely extended. I mean, you look at stocks like Apple. Apple's gone up so much. Microsoft's gone up so much. You really, in your heart, you feel like, dang, I really missed the time to buy. The time to buy was probably like at $200. The stock is now at 320. And
Yeah.
I mean, it's like you've seen all these stocks go up so much, but the economic me says, look, for exactly the reasons that you pointed out, yeah, money should continuously flow out of treasuries and into equities. Like rates are not going up anytime soon, I don't think. Like if you pull up TLT, that's an ETF, how I watch treasury rates. And as you can see, it's close to breaking out, which means rates are near the lows that they were in July, when everyone, when the trade war really heated up and the Fed was saying we are going to cut to accommodate the trade war. It's about to break out. And that could be due to the fact that Fed feels like if this coronavirus gets a little bit worse, we are going to cut rates. That may be what the move is proceeding. But either way, like money is moving out of there. Like you're not getting enough yield. And so the money ends up going back into these stocks. And so, yeah, I think on any pullback, it's like, as long as you have good technicals in good fundamental stocks, they should be bought.
Got it. Now, this is something that I mentioned to you before the call. Goldman Sachs warning about, maybe a potential deeper stock market correction of about 10%. Do you think that 10% corrections are reasonable in a market, or do you think that 10% or, say, 10 to 12%, do those often lead to larger corrections like 20 to 25? I mean, have you ever done sort of a, maybe research on that? Like, what is the sweet spot of a pullback, and how do you define a pullback versus a correction?
So you can look at a couple different ways. A lot of times I like to go into the mindset like every situation is different, but you can go to, look at the VIX, and you can kind of gauge, okay, if the VIX spikes, above 30, the market is really fearful, or like above, 25 or something like that. Like you can see kind of levels where the VIX spikes up, and you can use that as a gauge to be like, okay, I think the market is too fearful. It's done pulling back or something like that. But for the most part, you kind of have to just digest in that moment how the leadership is doing, how the strongest sectors that have led the market before, how are they faring? Because usually they will start to do better before the rest of the market. And how I would categorize a pullback to a correction is a pullback is normal. Profit taking leads to a pullback. I think this coronavirus, something that's very short term that people know will eventually be fixed, is a pullback. A correction would have been like what we saw in, I don't know if it was 2018 or 2017, when the trade war really started to heat up. What was it? Yeah, before 2019.
Oh, right here.
Yeah, that is a correction where you're like, okay, the trade war could significantly impact these equities to a large extent. The risk is so unknown that, the only reason you could take a shot on stocks is if they're really, really undervalued, which they did get super undervalued right around Christmas time. So that would characterize a pullback. It just all depends on the scenario. And I think if you can see the short-term outcome, then it's a pullback. If you really can't see the long-term outcome, then it could signal a correction.
Got it. How do you separate your mindset from a trader to, an investor? Like, I guess my question is, how do you put on the hat of, one day looking at a stock as, say, from the trading perspective, to maybe looking at, this could be like a longer term swing trade? How do you, do your technicals or your fundamental analysis on that basis?
Oh, that's a great question. So, when I trade, it largely, you have to have all the trading factors of momentum, specifically momentum, on your side. So you have to use you have to overweight a lot of technical factors. You have to make sure the fundamentals are good. Like bottom line, you have to think to yourself, okay, it's a good value compared to the market. And as long as the technicals show continuous momentum, that's how I'm looking to trade. But as far as like a long-term investment, I love to buy stocks on the long term when they are just hated and down. I remember I got Lululemon at around 115 after it reported a terrible quarter a couple of years ago. It was like, I think it was, that one. It was around it was around there. And I was telling, my dad, I was like, look, I'm going around, I'm seeing all these dudes wearing these Lululemon shorts. And he's like, guys wearing Lululemon? I was like, yeah, you don't realize it, but when girls go to shop there, they're going to pick out stuff for their guys. And so he's like, no, I don't get it. And that's when I made a long-term buy in Lululemon, and it ended up paying off so much. And if you look at the stock was down so much. It went from 156 to I think 115. I said, look, it is like in the real world, I see this change happening. And when the stock's beaten down, that's when I like to make a long-term investment. And you can
Interesting.
see
So it did a
yeah.
30% pullback, and then it went up almost what, 200 or 150, 130%.
Yeah. Yeah,
Wow.
that's one of my favorite like long-term investments so far. And I think I nailed that one just perfectly, the trend and where to buy it, where the fear was, the peak fear was, it was at that moment, you know.
Interesting. And
Yeah.
the interesting thing is, I really like Lululemon as a brand and what they stand for, and it almost the trajectory that the brand is in is very analogous to how Nike was, in the late '90s and early 2000s. I
Yeah,
see,
you could say that.
yeah, because like I see the same things that Lululemon is doing. The way they market, the way they're starting to get more famous people to start wearing their activewear, right? Like, I feel like Lululemon could start targeting, the market of, say, Under Armour, or even, Reebok and Adidas, because I think Reebok and Adidas last couple of years have not been doing so well. And hot brands like Lululemon are the it thing for millennials.
I think I'll agree with you. I think Adidas has done a decent job in trying to expand to casual wear more so than sportswear, because I think they're getting beat by Nike pretty bad. And Reebok, I don't think is doing that good overall. But I think you're right. Yeah, they could, like, in the future, you could see like women's shoes or even men's shoes, or I'm sorry, not men's shoes, but like men's clothing, like tennis apparel, for instance. Tennis apparel can be branded, like you'll see Rafael Nadal wearing a Lululemon shirt or something like that. I could totally see that. And that helps their outward brand exposure in international markets, which is really not even where their growth is today. They're very smart in where they're like, we're not just a women's company, we are going to be a men's and women's company. And so, that increased their total addressable market by, 100%. And I think they have not even hit international totally. So yeah, I think they have a limitless runway.
What do you have on your radar for the upcoming week?
Right now, so like I said, I have Apple and I have Medtronic. So, recently I had talked about the healthcare sector being one of my favorite sectors. I think last night Bernie really just destroyed the Nevada caucus. So I don't know. I was kind of high on pharmaceuticals. I love Merrick Pharmaceuticals and Bristol Myers. Those two stocks I think are phenomenal fundamental stocks trading at great prices. But if Bernie Sanders, he has so much momentum. I don't know how much the momentum would be in those pharmaceutical players, but Medtronic, they've been hurt a little bit by the coronavirus. Their estimates are still looking up. Guidance is still great. And I think it's in a sector where you are going to see still continuous innovation and growth as far as product lines and how many problems they can fix in the world. Medtronic is one of the biggest healthcare medical instrument companies, and I think they're at a great time to buy right now. They just missed their quarter because of the coronavirus stuff, so I like them on this pullback, and I don't think they should break 110.
Okay, 110. All right, I see. Just below this low, essentially.
Yeah, I think they should hold 110, but I'm really positioned lightly because, like I said before, Monday, latest Tuesday, we are going to know whether or not this market wants to pull back a little bit more seriously than we expect.
Got it, got it. Quick question. So when you outline, say, 110 as a figure, is that based on, say, this consolidation that led to this push up, or are you talking about, just a maybe fundamentals, value that's giving you 110?
Sure. So I think, I think you can look at it both ways. Yeah, I think you're correct. That little area that you just showed, that consolidation area, that's around 111. So I think 111 is the midpoint of that consolidation area. And it's also the breakout point that it had. You see
Right
that
there.
high that was made in September right there before it ended up pulling back?
Oh, right here?
No, in
Oh,
September.
right.
Yeah. So that is kind of like the layout point. That's where I expect, a lot of the distribution to be at 111. So I'm giving myself that chance to, if I hadn't already bought, I may buy even until it hits 111 and then wait for it to go down to 110. And if it breaks 110, then I'm going to sell it. So I kind of associate it like that. It should stay above its breakout price, which is around 111, 110.50. And so that's kind of how I gauge it. And that 110 is just, you have to give yourself room for margin of error, but it should not break 110. That's the bottom line. You have to stick to that last line.
Got it. Got it. Good to know. Good to know.
Yeah.
Any other thoughts from your side? Anything else you wanted to mention and talk about?
No, just the fact that keep an eye on rates. I think rates will give you some detail about where this market will go in TLT. If you start to see this thing break out, get ready, because I think that's one of the first signs that we will see that'll show this market is going to pull back. That, okay, this coronavirus stuff could get a lot worse. It could actually start to affect supply chains more so than one quarter. And, you know, this move that we saw in July, if you see mid-July all the way, you see how it spiked up?
Mid-July, right? Wait. Right here?
Yeah, right here from there to there. You see how it kind of spiked up from 130 to 150,
48.
I believe.
Yeah.
Yeah, if you believe it, but that was actually one of the first signs that told you to get out of the market before it corrected. And so if you look at that midpoint, like if you look at that timeline and compare it to how the S&P did, that was right before the S&P sold off.
Interesting. Let's do that. I want to see this side by side. So let's see here. So we're talking about mid-July or so. All right. So we're over, this is July right here. Or actually that's June, sorry. This is July middle. Oh, I see. So it's sold off right near the end of July.
Mm-hmm.
Right there. Okay.
And then during the consolidation period, you start to see rates start to go back up. So the fear kind of subsided a little bit, but then it spiked up. Market was not ready to go back, spiked down. And as soon as it kind of comes down and stops making lower or higher highs, you start to see the market gain confidence in the economy again and start to continually go back up. But this spike up right here could be a warning. Like the market hasn't really made a move associated with this spike up. And if you see it continuously spiking up, I bet you this market will pull back.
Okay, okay. So basically what you're saying is, you know, for the people who are watching on YouTube right now, if we start seeing this starting to push up higher, we may see the stock market overall, you know, pull back more.
Yeah, and that's largely due to the fact that, you know, the rates are expected to get cut to a point where, you know, the Fed may sense that this coronavirus is actually going to do really, you know, harm on the economy that is not priced into the stock market at this point. It is not. And so I think, you know, a breakout in rates could end up being that signal of fear that tells people, okay, now's the time to stop being complacent on the virus. You know, it's done. But once again, I don't expect the pullback to be bad because the Fed is accommodating. You know, even if there is, you know, roughage from supply chains being hurt, you still have an accommodating Fed. So the pullback, you know, it may not be that much. Like I said, it may be another 3 to 4%, but it's not like a death wish. You know, you should still be ready to buy at the bottom of the pullback.
Got it. Got it. Awesome. Well, we have a lot of information to look out for the week ahead. I appreciate you giving us a rundown. And
yeah, it was awesome.
I'm especially looking forward to you know, your Monday update. So for those of you who are watching on YouTube right now, again, come join Cryptosomniac, folks. At the bottom of our videos, typically we have the Discord link. So do come join the Advantage side so you can see these updates that Faisal puts out every day. He has a market open, you know, midday update and the closing updates for the day. All right. So I hope you guys come join. And until then, I'll see y'all in the week ahead. All right. Take care. Cheers, Faisal.
Take care. Have a good one.